I've been telling you that I need a new computer, and I'm jealous that you just picked up yours. Every time I go to load the calculator, just like the 4-bit calculator on my PC, my whole machine just comes to like this crawling halt. Like it's just like
what?
It's like I've launched some like 3D rendering, like high intense Photoshop thing, and my computer just like drags for like 60 seconds.
Wait a second. You're talking about like the Windows calculator in Windows 10?
Oh, yeah. Yeah.
You got a spinning hard drive or a solid state drive?
No, I got a solid state drive, and like I'll have Excel running, I'll have my trading systems running, like I've got other things running, no issue. And then I load a calculator, and it's just like
you should. There's a couple of like SFC scan. Now there's a couple command line things that you should do to like check the integrity of your Windows system files, because that's such a core application. If that's having trouble launching, I think there's probably some damage somewhere. I would check for damage,
right,
at the software level, because it's unlikely that the SSD is physically damaged. But yeah,
I got to break the piggy bank open and purchase a new computer at this point, but soon enough.
I can hook you up with that. I know all about it, man. I got people who make great computers. This computer I got now, I'm flying right now. It's so good. I mean, not on this laptop, but whatever. Yeah. No complaints. Oh my God, is your brother in here? Oh man,
Matt Medeiros, big hitter here from the WordPress space. He's in.
I want to hear the screams of all of his children. I've heard so much about Matt. Matt, the WordPress man, Medeiros. That's wild.
Yeah. And meanwhile, your kids are locked down in your basement, basically trying not to make noise right now.
One is sleeping, undoubtedly going to scream somewhere in the middle of this, and the other one is downstairs, hopefully hypnotized by a large screen, hopefully in a foreign language. I don't know whatever we did to placate him. Like, the kid needs to shit, he needs to eat, he probably needs to sleep, and I'm like, I got things to do right now. Wife, hello, wife. This kid needs somebody.
I love it.
I should get an office one day.
Yep. I just get to look from afar right now. Just got a dog I got to feed twice a day, and that's it.
There you go, man. There you go. Well, if you've got meaning and purpose without children, God bless you. I was totally existentially confused without progeny, and now I'm like, God, I could go for some of that confusion again. It is what it is. Grass is always greener.
Yeah. All right. So we get a lot to talk about. We get a lot of things on our plate. And so, to give a little bit of context, just for the folks that are like tuning in, basically, the short of it is we're two friends. We've been discussing life, markets, tech for years. Every few weeks we get together, we kind of shoot the shit, what's going on, what's interesting, what's happening in markets. And we're basically just doing that live. And we figured we would just record the show today and maybe take some questions at the end, see if anybody's got some comments. As always, not investment advice. We're just two people. Just assume we're talking up our books no matter what. Like, if we like something, just assume we own that thing. And you should not be buying it because we're saying it. Just assume our interests are there and do your own homework.
Entertainment and education, right?
That's right. So, Voyager, and so first topic that I think we were shooting the shit on was Voyager in this recent bankruptcy filing.
Yeah, that's interesting. Well, I don't know if you got to look at the actual filing. When a bankruptcy happens, you get so much more detail than whatever is sort of bandied about in like headline news and Bloomberg or FT or wherever, Business Insider. I think what caught my eye is the stock has been cratering. If you trade pink sheets on the Toronto Stock Exchange or whatever, and I think what was really interesting was that SBF had actually bought equity, what was 5, maybe just shy of 10% of the company in the immediate aftermath of Luna. I don't remember the exact timeline. So this is, very young billionaire who is buying equity in this sort of unbanked bank, if you will. We'll find out how unbanked they are. And I was kind of scratching my head. I did not understand why he would be buying equity in this company. And then in that bankruptcy paperwork, they reveal he borrowed a shitload of money from them, right? He does the equity stake, but then they give him $300 or $400 million, right? And I don't understand the legal ramifications of this swap or whatever. But then he is adding liquidity because I think if he doesn't, maybe that loan to him gets recalled immediately because of the bankruptcy proceedings or something to that effect.
Oh,
and he's got to like shore up the dam and make sure that there's no leaks. I assume that raising $400 million, even if it's a $20 billion, $30 billion company.
Yeah.
Who's sitting on that? I think yesterday or something like that, there was an interview where he's sitting on $2 billion. I was like, that might sound like a lot, but it's not a lot in a $1 trillion enterprise.
Right. Yeah. I mean, it's kind of interesting because, he has been sort of coming to the rescue or at least he's publicly saying he is open and available and interested on all of these different companies that are basically, underwater right now or just outright insolvent. And so, it's basically, so if we take a step back though, like it's basically SBF and, SBF, Sam Bankman-Fried, and the Binance, CZ, right? Like they're basically the big players in this, right? That are flush with cash right now and can potentially make some moves. Like these are the two head honchos, would you say?
Dude. CZ seems like he's in a fucking great position right now. I think Sam said that they had slowed hiring, but I'm under the impression that Binance is just full speed ahead. Look, CZ is older than Sam.
Oh,
And then that experience, it's not that Sam is inexperienced. He's just young. I mean, he was at Jane Street, I assume, straight out of high school or college. I met a guy who says he was his manager. I actually knows him on some level. He's like, he's not fraudulent. He's just a risk taker.
Yeah.
I was like, that could still blow up in your face, but at least he's not a thief. But I don't know, or I haven't heard any deals that Binance is announcing, so I don't know where they are in that.
But who's got the bigger cash pile? Is it FTX or is it Binance?
I don't get to see their balance sheets. I assume Binance. I think Binance is bigger, just all around as a company, and I assume that they are fairly liquid. They've got a lot of things going on, right? Because they've got Pancake Swap. Like they're getting into DEXs. Yeah. I guess SBF kind of pumps Solana. They've got with the FTT token, but I don't think they have anything that's quite as like decentralized focus as CZ does. To CZ's credit, and much to Brian Armstrong's chagrin, right? Like if Coinbase is going to keep up, they got to figure out this DEX game. Because I don't, especially in this recent, shakeout since Luna, seeing all the CeFi guys take a shit. And I would say for the most part, the DeFi protocols, at least the collateralized ones, so far have not failed. Like the protocols are functioning. Yeah. And that's an interesting thing because I guess the transparency of DeFi versus CeFi has a real pro here. We kind of know where the book is. I would say, CZ in some respects, he's probably, at least what we can tell right now, he's seeing the future a little bit better in the sense of he is seemingly prepping for the DEX takeover, right? I mean, which is almost inevitable at this point. And I don't want to be that nonchalant with it, but like liquidity is going to effectively make itself to these decentralized, cheap exchanges, right? That don't have custody risk and all the other problems that we're seeing with these CeFi. CeFi always plays a role if you go from traditional banking rails and like, let's say the Federal Reserve or the ECB banking system into crypto and you convert to a stable coin, be it a Tether or a USDC, you're going to need that initial CeFi relationship. But if you want to like start funding a startup in, let's say, Nigeria, or even funding a startup in something, a bit more like a developed country. If I want to pay for a team in Malaysia, right, I might use USDC or USDT instead. It's just it's easier in many ways, and that becomes all DeFi. And so CeFi, I think, has to shrink. I mean, it has been shrinking in proportion to what DeFi will do. That seems inevitable. There's no way around it. So any exchange who isn't building for that future, I think, gets left behind.
And so back to like SBF here. I mean, do you think? I mean, this is what's interesting, right? So basically, you have SBF out there, and I don't know the story fully on everything he's been saying, but I know he's very interested in deal flow, supporting a lot of these distressed CeFi or just other players in the market. But this is kind of the place where history is either going to be very kind to him or very brutal to him, right? Because if we come out of this, right, and he makes these deals, he funds, he opens up lines of credit, and he gets himself involved here, and everything survives, and we rebound and hockey stick up, he will be treated as a genius, right? Like he is, oh my God, that, you know, the strategic nature of him, everything's going to be so beautifully written, and his history is just, you know, he's going to be it. Like he's going to be the savant. And then if it goes the other way though, and like we're already seeing here, I guess is what you're sort of saying with Voyager, if he's deploying good money after bad assets and we go south, then he's going to be considered to be a reckless, young, immature founder, right? Like this is the crossroads.
Bingo. I mean, when did people start hearing about Sam? I feel like, I mean, I know they've been around since 2018, but I feel like it wasn't until maybe late 2020 or early 2021 where like his name starts to get plastered everywhere. And it's only accelerated. This sort of like, you know, persona has come up. And, you know, interest rates, where's the Fed fund futures rate? 1.75, 2.5. I've already lost.
Round two.
Right. And, you know, all of DeFi is yielding 5, 7, 9, you know, when Anchor was around, allegedly 20%. And I think someone pointed out, like, there was this like absurd sort of leverage cycle. I think it was that the CEO of Swan, what's his name? Corey. He was like, Alameda like lent, you know, something to like Galaxy at 5%, and Galaxy lended it to like, you know, Voyager, and then Voyager lent it, and then the pyramid scheme kept on building, and then finally someone lent it to 3AC, who put it into Anchor.
That's
and so it's like you pulled the wrong Jenga block, and now we're just waiting to see like who's the fucking bag holder as you know, as the liquidity exits, as everything deleverages. You know, everyone's calling Sam like this, like JP Morgan's like, no, he's not going to be like a lender of last resort because he doesn't actually print money, right? He's not the Federal Reserve. And he hasn't been around. He comes from Jane Street. You know, he is smart. He knows how to take risk, but the tide is going out. And I keep on thinking about, remember you're old enough. I don't know if everyone's old. You remember the crazy tsunami in 2004?
Mm-hmm. I do.
Right? And like all of those insane videos, right? Like the beach empties, people are running out into the tidal flats. They're uncovering like old boats. And then you see like the huge wall. And I feel like we're in that part where like the money is rushing out. Money is rushing out. You're starting to see things, you know, that you're like, whoa. It's the Warren Buffett quote. The money will return, just we don't know who survives till then.
That's right.
And it's wild, man. It's wild.
I mean, so that's like sort of the state of the crypto market right now. And I mean, especially Bitcoin is we're sort of, everyone's like looking around right now for like, who's next? What's the next shoe to drop? And who's potentially insolvent, right? Like that's what we're all kind of tipping toe edging around. And I mean, I got to imagine it's amazing how long this takes, right? We talk about how fast markets are, but the Luna collapse happened in May. This was like 2 months ago. And then it took a full month, and I think you're the one that was saying this, it took a full month before we even learned about 3AC and some of these other like secondary order effects. And so part of me thinks, well, damn, nothing's happened yet, so maybe the coast is clear now. But as we've seen, this could easily still ripple through.
Hell no. Yeah. I mean, I haven't heard any miners getting taken over or gone bankrupt and had to like, you know, liquidate all their Bitcoin, you know, losing their actual physical equipment that they collateralized. I don't know where their pain points are, right? But I say like the longer Bitcoin stays down, the longer these guys aren't seeing the cash flows that they expected, and they're going to fail to meet their debt repayments. And the leverage is going to fuck them up. You know, guys like Marathon, they might be sitting on a lot of cash, but their burn is high. And you know, at least one of them has to blow up. Right.
What does the profitability look like right now for a miner? Like, what's the spread? What's the break even? I mean, I know it depends on who you're talking about, how stabilized, but like the big players are still mining profitably right now, I imagine.
I mean, I don't know what the cost is. Someone could toss up the hash ribbons and see what the, you know, average cost to mine is. But it's not a question of like, is it profitable to mine Bitcoin? Like the hash rate is actually very steady. I think it hasn't moved much in the last 4 or 5 months. So we haven't seen people selling off, but it's what is what is their repayment, right? Like, a lot of these guys took on debt to buy the miners or to get the
100%.
facilities or to lock in the electrical rates or whatever it takes to, do something that's capital intensive, and mining is. And it's like, these guys have bills that are due. What's that cash flow look like? What's it look like for 6 months? Let's look for 18 months. Because I'm not entirely in the camp of, that we necessarily stick to that 4-year schedule, the Bitcoin 4-year schedule halving or whatever. It's conceivable. It just takes longer. I'm hoping it's the 4-year schedule, but hope is not a strategy.
That's right. Yeah. I mean, when I look at, a lot of these miners, the public miners right now are trading some 80, 90% off of highs right now.
Oh, yeah.
Right?
Easily. Yeah.
They've gotten totally taken out and just sold off, left for dead. So I guess, I haven't looked at balance sheets. I haven't looked at debt, service ratios, but
there was some research by a guy at Arcane.
Yeah.
Arcane just put something out about the miners, and they were going through all the cash flows and what were their debt schedules like. And I thought they said like Argo blockchain might be like the strongest of the bunch. I don't know how they computed it. I'm talking about headline stuff here, but yeah, it's an interesting space. And I know that it's one of those guys that was at Core Scientific, a very new SPAC that became a miner. They're clearly on the circuit talking about like how blockchain is this revolutionary accounting method. It's like, yes, welcome to the 2010 narrative. You're correct, sir. So yeah, we'll see.
Yeah, I guess, historically, even from a price perspective, though, all of the, the headwinds, the turbulence, the catalysts, factored in here. We're basically, 65% off? No, actually, we got about a 74, 75% correction from all-time highs. Is that right? Something about that?
Bitcoin? Yeah, that sounds about right. And the tricky part is, like, the math from 80 to 90% is another 50% fall.
That's right. Yeah.
That's the part that's like a little counterintuitive, especially if you haven't seen it before. Yeah. And so, if someone said, oh, Bitcoin's going to 10K, I'm like, sure. Like, that totally fits the model. It's fine if it does, buy more. But if it also goes up, it's fine. You never have enough or you have too much.
Right. There's the only two positions in markets. I love it. Yeah. Longer term, basically, like, if you're a believer that Bitcoin is here to stay, like, these are the golden dollar cost average opportunities, right? Like, over this time period when things and assets are down 70% from highs, it could take 2 years, it could take 3 years, but these are the points you want to be continuing that DCA. Is that kind of how you see it?
Right. Well, I think you're making a bet on the behavior of central bankers and their willingness to provide liquidity and make the system flush with cash the way they have for the past decade. Now, arguably, the macro has changed because of the geopolitical uncertainties surrounding, Ukraine and I guess by proxy like China, Taiwan, and all this reshoring and energy and food fertilizer disruption may prove to be a persistent inflationary factor. I doubt that, right? I think globalization is not like a 10, 40-year trend. I think like globalization is a multi-millennial trend, right? We've been globalizing for hundreds and thousands of years, basically. Yep. The question is, how long does this blip last? Is this like a quick inflationary cycle, or do you have something more secular akin to like the 70s? I don't know who's got the crystal ball on that, but I will say like the Ukraine situation seems like it can come to a very, very quick end. Putin could say, hey, we're done here. We have Donbass. Let's have a ceasefire. And then he'll just, wait another 5 years to continue his war. But that would give the markets the breathing room they want. And the Fed might feel like, hey, we don't have to tighten as much. But as they continue to tighten, the pressure's on everything. Stocks, bonds, you name it.
The last 2 weeks here, I guess, is a very, very, very short window in the grand scheme of things. But we do have, the Fed is perhaps happy over what has, taken place here over the past couple of weeks, where we are starting to see commodities. We are starting to see that demand and pricing pressure sort of erode a little bit. And so, maybe the market is starting even right now to put a disinflationary sort of environment. The fact that the Fed is, finally getting up there in terms of their Fed funds rate, and that maybe they're not going to start cutting. I don't see cuts in the very near term, but at least they can ease up on the hiking, right? And maybe that might give enough for the market to kind of flatline here, right?
I think the Fed funds future says that the earliest cuts are supposed to come in 2023.
Yeah.
And I'm not one to second guess guys who do that for a living. They could be wrong, but I think that's like the best guess in the room. And I think, July is seasonally the high in at least gasoline in the United States.
Right. Yeah.
That's peak energy. So if things cool from here, that would be normal. And we could spend years at $100 barrel oil. I mean, we did it back in the early 2008 through 10, 15 period, something like that. And I remember $100 barrel oil. It's not crazy. It's crazy the first time. It's not crazy this time. How food and other things get affected. That'll be an interesting tell. But the Fed is getting what it wants. They're still talking very hawkishly. I don't know if that's just saber rattling. I think Dan Tapiero swears that they need to get the interest rate to 4 or 5%. I suppose it's possible. But debt to GDP is way higher than it's maybe ever been. So how that plays out, I think remains to be seen. Interesting times for sure, as your proffer goes.
Yeah, I mean, it's definitely going to be interesting. I mean, I guess in the near term, short term speak, markets are starting to catch their breath a little bit. Yields are coming down a bit, right? Mm-hmm. I mean, we do see some stabilization in like the 10-year yield, and I think you're starting to see a little bit of bid in growth assets. I mean, I think I just posted a chart on Twitter a few hours ago, but I look at ARKK as sort of the poster child for growth risk appetite right now, and again, they're down 8 months in a row. They're down about 78% from highs, right? And probably, again, all for good reason and all as it should be given the macro landscape and the liquidity just totally drying up. Yeah. But I mean, over the last 2 months now, they've gone sideways. They didn't make a new low in June. We're starting to see those positive divergences. They're breaking to 2-month highs right now, right? Like there's technical factors here that are showing, maybe enough is enough in the short term, or the downside has been priced in for the immediate term, right? I mean, I'm not going to say that's
Yeah. No, I know.
Maybe this gives us, for a nice July rally, at least one green month out of 6 down months in a row, right? I mean,
yeah, totally. Yeah. I mean, I think, if you get the summertime rally, low liquidity, that's totally plausible. I think we got to see what happens in that, classic crisis period. When you get into that September, October, everyone's like, oh, do you remember 29 or 87 or whatever? And all those animal spirit narratives kind of come to the fore. Time will tell. Time will tell on that account. I think, I was looking at ARK. It's funny that you mentioned it, right? Because that is my proxy for all the growth plays. And there's a couple other names I'm seeing, they're making bases, looking much healthier.
Yep.
But I think, and mortgages, I think actually a big one, right? Mortgages have probably moved down to almost 100 basis points, I want to say.
Pretty, those are wild. So intense.
And so this is the thing, the volatility in the fixed income market.
Yeah.
I think it's historical. I don't really follow fixed income as closely as equities or crypto, but it's certainly nothing in my lifetime. And I saw someone post a crazy chart. I don't know how you keep track of these stats, but someone looked at bond performance since the inception of the United States or some shit. And we haven't seen a first half sell-off like this since 1780 or something. I was like, whoa, yeah, that feels about right. I've never seen TLT move like this.
Yeah, this is the worst. I think this is the worst 6-month start to a year for the 60-40 portfolio ever, I believe.
That's possible. I mean, 60-40 is down, 15% maybe?
I think it got down... Yeah, I think it got down close, almost 20% draw. No, really? Yeah, maybe it was 16. But it was 15 to 20%, something like that was the peak drawdown.
I mean, given what I see out in growth land, I think most people would be happy with 15% drawdown.
I think so too.
Right? If you were out there, even Apple is probably down 25%. Right? Let alone, fuck Netflix. Right? If you're in some smaller growth names. So I would say 60-40 has outperformed by many measures and did its job. And I think that this narrative that inflation is here to stay, I doubt it. There are some real changes. Absolutely. The pandemic has ushered in remote work, and our consumption patterns are different. There will be reshoring, but I'm a firm believer that capitalism is gonna solve this stuff. These supply chains will be figured out, and we will end up with excess stuff. There will be too much stuff, and that will drive down prices. But I've yet to be proven right on that. But I if you look at like the tips relative to their regular counterparts, their non-inflation protected stuff, tips are underperforming. They have been underperforming for a couple of weeks now. So the market is saying, okay, we're past the worst of it. Yeah.
It's it's going to be interesting. It's, I guess, the thing that I have the issue with right now, and it's funny because I have been more and more on even like out on the risk spectrum talking about NFTs and following a lot of what's been going on in that space. And we can talk more about NFTs in a little bit, but like, the narrative or the rhetoric that people have really clung on to now is just the Fed, the Fed, the Fed. And look, for good reason, right? Don't fight the Fed is something we should, is tattooed on every like investor's arm, basically, for good reason. But I do get worried when I'm in other spaces and folks, or even let's just call it young kids or people that don't have market experience are paying lip service to that. Well, we got to just wait for the Fed to turn. And it seems so ubiquitous. And not that I think it's wrong, but I think there's going to be a severe lag of markets are going to take off pretty significantly by the time the Fed actually says the coast is clear, we're going to start cutting. That's my guess. And we had this conversation the other day, and I think you said, for the right person, it doesn't matter. That's okay. Like, you know what I mean? If you're investing over a 5-year cycle, you are waiting for the coast to be clear and you want to be easy at night. So I guess it comes down to time frame and activity level, but I do worry about that narrative.
I think it comes down to what is the activity, right? If you're trying to make money by using money, you are paying far more attention to the Fed, or you're accustomed to paying far more attention to the Fed. If you are actively out there building new products and services, you should be aware of the macro picture. You should know about your assets and liabilities and duration matching, right? If, let's say you're building on Tezos and you just got a Tezos windfall, but you owe your developers in Estonia something in USD, well, you better solve that, right? I don't know that I would hold the Tezos bag if you have someone's USD payment or Tether payment due in a week. And those are the things that I think builders need to be more conscious of. But everyone says it. It's mimetic at this point, right? Like this is the time to build. Builders, bear markets, blah 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 blah. And so the investor who has like a normal day job and isn't keen on like leading a team or doing a startup, sure, they are paying attention to Fed stuff, or they're doing the dollar cost averaging and they're not paying attention. But I assume anyone who's listening to us here is trying to pull the one-armed bandit and see if they can get an edge at the table. And so that is why we're paying attention to the Fed. I mean, China, I don't know if they're actually doing it. They're talking about putting out a $220 billion bond offering. And I was like, oh, well, someone is trying to play the stimulus game. Someone is trying to build another ghost city or whatever it is that China builds. But they're net short energy. They're net short food because they import all this stuff. So they think that this is an opportunity to pump more money into the system and take advantage of things at a global scale. And no one else is talking about that. So
interesting.
We'll see if those Fed, if that Fed chatter. I mean, the next meeting is in 2 weeks? 2 weeks. I think it's going to be 75 basis points, and the only reason I think that is that that's what the Fed funds future rate says. We'll see if it breaks something.
Yeah, I mean, I think 75 bips is probably reasonable. I think, again, like you say, that's what the market's pretty much pricing in. I guess the question would be then, what is the fourth quarter and the first quarter of 2023 look like? Like, do we get any updated guidance there? Do they give any hint that they're pleased with their results, right? Or I don't know, maybe CPI is coming down a little bit. So yeah, I don't know. It's beyond my pay grade, but it certainly will be interesting to see, basically market reaction to all of that.
For sure.
Yeah. So, as I sort of look at it now, I don't know. I mean, no crystal ball here, but I'm inclined to believe we can get some type of summertime rally here. Obviously, I will certainly change that positioning if, as news develops here. But right now it looks like the markets are kind of hungry for growth, and we're starting to see just price action confirm that. So we'll see how long it lasts. But, and the VIX, I mean, I'll tell you, the volatility index, that thing refuses to budge. I mean, even in the peak of it, interesting thing this year, right? Where the VIX you know,
Isn't
you could
doing
almost
shit.
say, yeah, like it's just not functioning as
But this is why I'm bearish, because I haven't seen VIX 50. And you know, maybe that's just trying to drive in a rearview mirror. I did not see a real fucking panic. I did not see, I didn't see all those telltale signs, and that's why I'm like, I like cash still, or I mean, I still have a lot of exposure, especially in crypto and equities, but I have a much larger cash balance than I normally do, because I'm like, there's still going to be some fucking weekend where there's an emergency meeting at the Fed and the Congress gets together and they do some other $1 trillion infrastructure deal. I don't know if it's fucking monkeypox. I don't know if it's Taiwan. It could be fucking aliens, you know, assassination attempts. Like, this is an interesting sim. This is the best of all sims. And people haven't shat the bed. Some parts of crypto have. Some parts of the growth market have. But I haven't had like a standard investor. And this, you know, happens at bottoms. My friends and family call me and say, what should I do? I'm like, the fuck do I know? But if you're calling me, probably hold, because it's usually the sign that we've now hit the bottom. And that call didn't happen yet. I don't think there's been a real fear, no matter what the CNN Fear Greed Index says. It doesn't, Happy to be wrong.
Yeah, I mean, I'm kind of inclined, I don't know. I don't want to say that there's, you know, this time is different, right? That's the famous phrase. I mean, I will say, you know, look, if you look at the NASDAQ volatility index, it did get close to 50, right? Like we got some wicks up there around 45 or so.
Sure.
And if you look at individual stocks and, you know, you look at some different volatility, I mean, look at well, I mean, I guess you saw a good move in like the MOVE index and like some of the credit markets too. But yeah, I hear you. We didn't get the classic 50 plus buyable vertical V-shaped rally, but the markets also didn't quite give us that either, right? Like we've been kind of grinding down in
because energy. I think energy buoyed the sector rotation. But I just expect like someday, just 1 week of just like pure mayhem.
Yeah.
Did VIX even hit 30? I don't recall. You know, shit's a blur.
VIX traded up around 34, 35, and it even stayed there for a few days.
Okay. Maybe that was it then, right? That's where I start to think like this is the panic. This is people getting taken out back and shot. And yeah, that move, you're right. The NASDAQ was fucking massacre. It's been a long time since I've seen a move like that. I think 2018 wasn't even as bad. I don't remember. COVID wasn't as bad for the NASDAQ, if I remember right.
I mean, back in 2018, the VIX did get the S&P VIX got around like 47, so it technically
the VIX went up. The VIX did, but the actual. I mean, I think the S&P's only pulled back 20%. Nasdaq only pulled back 20%. Really deep drawdown in the
technically, the Nasdaq volatility index was higher in the last 3 months than it was back in 2018. So you know, there was some different fear out there, and again, I think it's the duration of this. I mean, I think for a lot of traders, I mean, myself included, right? Like 8 months down in a row, or like 6 months down in a row, like even that longevity, which I know if we're history has happened plenty of times in the past. But in the recent bull run since 2008, like that is a long time dragging through the mud. And so I don't know, maybe there's a you know, if they don't, what's the saying? If they wear you
out, right? Yeah. Where's Brian? Where's Brian Shannon? Get him old alpha trend, man. It's a great point though, because they're doing the sideways grind right now. At least that's what the prices have been doing.
Yeah. So, I mean, I guess, you know, we'll see. Jury's still out on that. Macro's messy. One of the things that came up to me yesterday was one of my trading systems. So fully rules-based trading system outside of my hands. But yesterday it picked up XLE, which was interesting. And it's funny because in my head, the only thing that I'm thinking of is like, okay, let's rotate to potentially the growth trade. And here it is my longer-term system is going after the XLE ETF.
Because XLE is in a long-term uptrend right now, whereas the growth stuff does not appear to be a long-term uptrend unless you're using maybe like a weekly chart or a monthly chart. I don't know what periodicity you have there, but that doesn't surprise me because he actually had that really sharp, 20% correction, 15% correction. And it's pulled into a long-term uptrend. So,
it's doing what it should. And
exactly. Which should make you nervous because that's why you built the damn thing. It's never going to feel good to pull the trigger.
That's right. The best trades are always the most uncomfortable.
Is that Merlin or Lamerick?
That's Merlin. That's the old original.
Okay. Yeah. Great. Yeah, that's good to know. It's good
Yeah,
to know.
we'll see. But yeah, I mean, outside of, traditional markets, one of the other things that's just been on my head that I sort of wanted to just shoot the shit with you on was NFTs. And
man. Totally. 100%.
but the hatred for them. I want to talk about the sentiment around NFTs.
Yeah.
So I guess, on one hand, I should not be surprised. I think this is how every new piece of, I don't know, technology or avenue of the market is always sort of presented. It's always going to be the rich takers, the early adopters, and, the old guard or the slow to change folks are always going to poo-poo on this new thing. But it's still funny to me that it is the broad sentiment statement where people say NFTs are a scam. Just like NFTs are a scam. It's such like a blanket. It just reminds me of the internet is a scam. Like, what does that mean? You know what I mean? And I think the next level of the conversation is look, I think 99% of NFTs are totally crap, right? And they are going to go to zero. That's not, that is totally in my psyche of how I'm thinking about it. Probably 99.9. I mean, let's face it, there are zero barriers to entry to create an NFT project, to launch it. We could do it for $100 and have the new latest and greatest with a landing page of all these great promises that, this thing is going to do, go buy our NFT. So I get it, but it's the education component here that there is still something interesting going on here, right? And it right now.
The scam narrative. Look, I sympathize with people who think it's a scam because they're probably reading whatever Bloomberg or the New York Times puts out. Yeah. And so they've got a journalist who really doesn't understand software or cryptography or licensing, and NFTs. Look, you've heard me say it's just like having a membership card. It's literally a private key. Yeah, that's all it is. And what do private keys do? Right? They allow you to sign things. They allow you to authenticate. And so it's a method of authentication. So when you see CryptoPunks or Bored Ape Yacht Club go up, you're like, oh, you could just right click save as. Yes, I can take photos of a Van Gogh, right? I can take I can literally print 1 million man rays if I have the negative. It's not the reproducibility that matters. There's provenance. There's a relationship. There's a network graph that is very easy, permissionlessly verifiable. Right. And that network graph is the thing that makes sense because that's where you start to apply things like Metcalfe's law, and you think about all the network effects that are implied with the communities that are formed here. I mean, I just minted a pass yesterday because I want access to a community. Because I think that this community is at a very nascent stage of a massive art movement that most people aren't aware of, right? I've been following generative art for 6-8 months, ever since at least FX Hash on Tezos. I mean, I knew about Fidenzas and art blocks. I never got one. I haven't minted on ETH here. But generative art is fucking cool as shit. Yeah. And, the PFP thing is also interesting because people want avatars. But NFTs is just a licensing mechanism.
That's right.
That is a really profound thing. So you just think of all these software as a service businesses, all these airline point systems, any place you have some sort of ledger to keep track of who gets paid for what, where, and when. Yeah. That's going to be an NFT. I don't know if it's 5 years or 15 years. Look, there's going to be a lot of hype. There's a shitload of software companies that were around in the 80s that were no longer around in the 90s, and from the 90s to the 2000s. And it's hard to pick the winners. Yeah. But the space is, at least in my mind, it's obviously here to stay. And look, I've been saying that Bitcoin is the first NFT. Right? There's one Bitcoin, and it's subdivisible into 2.1 quadrillion bits or whatever, sats. And so you can fractionalize it. But the network there is the big kahuna. And Ethereum's a close second, and frankly, fucking Binance Chain. Again, going back to CZ, Binance Chain is up there, man. That was a killer play last year.
Insane. That was top ROIs. Yeah, from pennies.
Yeah, of all time in crypto. And he's super understated. Yeah, much to his credit. Yeah. But he does the interviews. He's pretty transparent. Yeah. And if I'm looking out in crypto land right now, BNB looking real good. I think they're right up in the all-time highs area. They're within striking distance of the all-time high relative to Bitcoin. I think that might be the quote-unquote, in hindsight, this was an obvious crypto play, except because it's bear market mode, no one is making that move. But if I had to bet on a big disruptor, it's like this hybrid CeFi, DeFi thing that's happening. He's the fucking JP Morgan, SBF, that dude, Carnegie, is Ford, like not a, unless, he's big, but CZ seems to hold the fucking keys right now. And I like all the moves that are being made there. But yeah, timing is everything. I don't know. I don't know the appreciation, in USD for the foreseeable future.
Yeah, BNB, I definitely am open to that. I don't own any. I don't know if I ever owned any, but I certainly like everything that's going on there. In terms of NFTs, though, like I think you're spot on. Like, there is a world, right? And I don't know that this should be the case, but there is a world where like literally every physical item should be an NFT, should have a digital representation of sorts, right?
Sure.
Even, let's face it, like you could have a designer piece of furniture in your home that costs, $23,000 and you have a digital ID representing it, and you can collateralize it, right? And you can actually take loan against it, or frankly, insurance companies are going to be auditing or want to keep track of everything, right? Like there are real use cases here, but yeah, I totally agree. It's the JPEG PFP crowd and price tag. I think it's really the price tag, right? It's the fact that a monkey is selling for $350,000. And everybody's just looking at it as saying like, wow, I could draw that myself, or I can right click save. But like you say, there is a community happening here, right? There is a brand that you are identifying with by holding that.
It's like modern art.
Yeah.
You go, you see a Warhol, you see a Picasso, or people like Jackson Pollock, right? That's the one every retainer's like, oh, I don't understand it. Like I could make that. It's like, okay. But like, you don't know the Guggenheim family. You don't know the Whitneys. And so you don't have the network effects to become iconic. And, I don't really like the art for Bored Ape Yacht Club or punks, but I get it. There's a status associated, and that status can continue to reverberate because it was, quote unquote, first mover. Cave paintings aren't aesthetically pleasing, right? But cave paintings were fucking first, and so they were valuable. That's just how it plays out, and you got to respect it. But I will say, I am fucking generative art really, man, it resonates with me because it's like this hybrid of like code and mind. I don't know. I've been playing around with this NFT platform stuff, like minting my own shit. Not that I'm a great artist, but I know how to give a natural language prompt. I know how to mint on Tezos. So I can go to like Midjourney and I can go create these crazy images. Instead of like getting a shitty Hallmark card, I'm sending people art that I make by talking to a computer and knowing what a Boolean string looks like and having like, some vague idea of like color theory and who are the artists out there. Right. And it's like this highly personal way of like making art / emojis and being like really dynamic. And then demonstrating that you were the first to make this image by making sure that the hash appears on the blockchain. Right. That provenance ability, I think, is key. Because that's all blockchains are, right? They're timestamps. They're decentralized timestamp servers. And if you have like a revolutionary quote unquote new look or a new meme or something, you want to say that you got there first.
So is that how you sort of see? Because so generative art to me is fascinating, and I'm looking more and more into it now. And I'm just trying to understand like how the market appreciates or values these things. Like, look, I get it from the personal like satisfaction point of view. Like I can look through different end results here and basically say, okay, like this one is super rad to me. Like I want it, right? Like I get that. I get the aesthetic personalization of it. But like in terms of like how the market is assigning value, obviously the artist that actually made it clearly has a big impact, right? Sure. A well-known, reputable, artist that has been doing their thing for 10 years, like they deserve a premium, or likely they have a premium. Right. But what you said there is interesting is like if someone were to essentially publish or present a new algorithm, for lack of a better word, to produce this art, that in itself is going to be quite valuable, right? Like that's what gives some value to a piece as well.
Look, it's so tricky to talk about. Like I didn't study art history. I don't run a gallery. The story is often just as important. The blurb is just as important, because when you think of great artists, they're often within like an artist movement, and so like, people know each other. Van Gogh and Gauguin, they know each other, and so that becomes part of the cachet. And I remember when FX Hash just dropped, and I'm clicking through, and like I'm a cheap bastard. Like I basically wanted art for free. right? We're talking like pennies for JPEG. And I just start to buy everything that gave me the remotest tingle in my body. Because I mean, there was literally too much to download, right? And it's not like you can just like copy the whole page. Like you have to do every interaction through your wallet. So you're wasting time clicking on your shitty ledger buttons, making sure that the browser wallet works, the thing is timing up, blah, blah, blah. But I collected a bunch of the early ones because like these are awesome. That there's some code back here that deterministically, but there's the nonce, the little bit of randomness produces this thing. This felt like a whole new way of thinking about what is art and the relationships that there. And I remember I bought something for like a quarter of a Tezos. This must have been October, right? Yeah. So what's a quarter of a Tezos? Is that like 50 cents?
Yeah, you're a cheap bastard.
Today, right? Exactly. But it looked cool. It looked like Chinese language and music. And the floor in that thing is like 50 or 60 Tezos now.
It's a good ROI.
Right. It's an amazing. I wish I'd bought more, right? Wish I had thought about the financial implications. But I'll tell you, I had no interest in the finance. Mm-hmm. Like, and when I started to use Hickett Nuck, which is now Tia.art, like, had no interest in the monetary component. It was mere like, oh, we have a new way of transmitting information and, more importantly, emotions to people through the internet. And it's harnessing this time-stamping technology, which is permissionless, and it's changing how the communities around the globe are going to coordinate their behavior. And that's just fucking cool to me. That just like, this is where we're clearly going. Where the money is, I don't know. I don't say it's anyone's guess. Someone's going to know better. But yeah, you got to get in there. You got to mint some things. You got to see the generative art. You got to build things on Midjourney or use DALL-E. It's so cool, and it's so fucking early. We were talking about like delays and things, right? I wrote my first blog post on Bitcoin in 2013.
Yep.
And I'm still like, people haven't figured this shit out.
Yeah.
Right? And I thought I was late. So yeah, shit's slow. Shit's fucking slow.
It takes time. I mean, I think buying an NFT was pretty much like the best thing I could have done last year in the sense of just getting exposure, getting feet wet, just seeing and experiencing what it even feels like and going through those keystrokes, as painful as they still are, like on a ledger on a tiny screen with a bunch of buttons. But I think you're right. Like, I mean, the same thing is what basically I need to do now on the generative art side, which is, just make something and mint something and, collect some things that are cheap because like you say on the Tezos, FX hash stuff, I mean, you can still buy plenty of things for like one Tezos, I believe, which is
tons.
Right? Like,
totally. There's so much cheap stuff out there. Just the aesthetics are interesting.
Yes.
I'll have to give you a crash course on Midjourney, man, because Midjourney, it's not generative art; it's the AI art generation, but that is super interesting, and it allows you to mint things. And I've seen collections that are clearly AI art, where the guy has like a thematic style, and he knows how to prompt the computer. And he's selling these stupid JPEGs for hundreds of dollars. It's like, okay, you just got to put the time in and have a taste. It's that whole theme. I think Howard Lindzen was early to this. He's the only guy that I can really remember who's talking about this. Like, it's all about the aggregation and curation. There's too many fucking needles, or there's too much hay. And you really got to figure out how to calibrate that signal noise. Where, like, maybe 20 years ago, you couldn't even get noise. Right, just the channels were so small, and now it's like I don't know where to look, I don't know where to spend time, and I don't even know how to filter what I do have because it's it's a water cannon just blasting you in the face when you turn on your Twitter. And so it's going to be interesting. The you've got you've got the birds, the moon birds, you got your doodles. What are the other PFPs that are hot? I don't remember.
I mean, honestly, I've been staring at this space mostly on the PFP side. So again, the whole generative side, I have really not paid attention to until now. But on the PFP side, that's what I've been sort of sifting through for the past year. And I mean, I've probably looked at, hundreds of projects for sure, maybe 1,000 projects at this point. Yeah. And the only two that I've been able to come away with is really doodles and moonbirds. I mean, like that's basically the only two that I've allocated to. I've had some other things temporarily, but like in terms of dollars that I'm actually comfortable and confident that there are some builders here and there's some interesting, at least new things that are being, tried. Like that's it. That's pretty much it. So you asked me what else. I mean, the only other thing I have like a flyer on right now is like Adidas. And they're a old school brand play that is dipping their toes into Web3. And I just think there's some interesting potential there, but like,
right.
They're not that expensive. And that's kind of it. I literally have either sold everything else or just cleaned house. And I'm a little more bearish on just the PFP space in general now. Like there's got to be just something very unique, different, or an all-star game that's coming out, because it's just it's too easy, it's too watered down, it's played out.
Yeah.
And,
I think that makes sense. I mean, I sent you a tweet that had like a matrix of like goats, small goats, A plus, and I was able to name, I want to say like 70% of like the top 10 or 20 projects.
Yep.
And I think I should do my homework and be able to name 100% of the top 20. Like I should at least know the name and what the emblem is, not the valuation. I don't care about the teams, but it is a spot to watch. These are emerging art forms, and I would be very, very surprised if this all turned out to be a goddamn scam. There's too many smart people. There's too much good-looking stuff. Just when it turns lucrative for the quote unquote investor who wants someone else to do the work for them. That goes back to whatever we were discussing earlier, right? Where it's the Fed, it's liquidity, it's when are the levers pushed to make asset prices rise? Because I mean, at least the Fed is doing everything in its power to basically make people feel poor, so their consumption goes down, which should reduce the amount of pressure and all these consumables.
Yeah, 100%. I mean, NFTs are the furthest out on the risk spectrum for sure, right? Like they are, right? They are the penny stocks of traditional markets, but they're like the penny stocks on crypto. So it's just like, the power of 5, to how aggressive you are allocating in this space. But to be honest, it's exactly what I want, because my trading is historically pretty conservative, personally speaking. Like I trade markets to manage risk and to not go through horrible downdrafts. And the NFT space is more like the angel investing to me, where like, let's try and hit grand slams. Like this should be a 0 or it should be 100x, right? Like, that's
right. What's funny too is like, when I think about it, I like Bitcoin because Bitcoin's trying to replace, treasuries, which try to replace gold. And I like equities, because I like ownership in like big teams and companies. NFTs, it's like a kind of different thing, because it's like, it's part game, it's part Facebook. Like I don't know what it does, but I can see this underlying technology where I'm getting like-minded people in a room and they're all demonstrating skin in the game and they're showing what they value. That just seems inherently powerful. And I will say, like, my book is predominantly Bitcoin, right, in the crypto side, because I'm mostly a Bitcoin maximalist, but I'm not like a Bitcoin fundamentalist. Right? Like I have to draw a line there, because like I have Tezos, I've owned all sorts of what, fundamentalists would call shit coins. And this goes back to like this whole thing with Nick Carter, right? Nick is, he is bright. I owe him maybe not a lot of money, but I would certainly thank him. He gave me an Urbit planet years ago. No one follows Urbit, but I've loved it since the beginning. And I think he had, one of the founders there, and the founder gave him a bunch of Urbit planets. I just DM'd, was like, dude, give me one of those. And he was super gracious. And seeing this guy get dragged through the mud, I mean, I don't blame him for fucking flipping off a whole bunch of people, because that like toxic fundamentalist crew who swears like you can only own Bitcoin, you can't own Apple stock, you shouldn't own any treasuries, you should burn all your fiat, you should mortgage your house, you should sell your fucking kidneys, and to hold some other asset is somehow immoral. Right? Like that. I'm just like, that is weird. You sound like a dude who has more in common with like Osama bin Laden and the fundamentalist Mormons than you do the founding fathers or people in sort of like the Austrian libertarian free association, free markets mindset. I will say, like, I don't like to hear scams, right? I wouldn't compare Ethereum to Bitcoin and say they're the same thing. Or that like Celsius tokens are going to be money. That, sure, we can call that scammy. But the way that guy has been trashed, just the low IQ fucking drooling idiots, and it's some big people too. Like Samson Mao over at Blockstream is like snipping him out of context and getting his whole fucking pleb army to like throw shit. You're like, bro, you fucking made it. Please don't like reduce yourself to this level. Comparing him to Roger Ver just seems totally immature to me.
All of this, so I'm like late. I literally just found like the Nick Carter stuff yesterday, or just realized it, but it was all because his fund invested in a Web3 company, right? Or like another, was it even another blockchain or like?
No, it's not another blockchain. It's like a wallet that realizes that wallets are an excellent way to like authenticate. Like when I connect to any Web3 thing, like I do in Tezos all the time, you know who I am because you can see my wallet, you can see I'm holding this token, it gives me permission to do other features on the website. Like really a no-brainer. Look, don't get me wrong. There are some like privacy surveillance issues that come with this wallet architecture. No doubt about it. Right? The same way there's all sorts of privacy issues that come out with email or using telephones or speaking in a public space or having any language whatsoever. Right? It's like how primitive and orthodox and dogmatic. It's the dogma of like that Bitcoin fundamentalist that's insane because they're not working from first principles.
Yeah.
Right? They're just like, it's like this reflexive dog whistling because look, markets are down and these people don't know what to do. And so rage is what you do.
Yeah.
And yeah, also, I mean, look, don't get me wrong, like Nick, he's moved from like this like super nerdy kid, right? Back in 2018, whatever, he looked like a total nerd, right? And now he's got like that thin mustache and his hair is nice. And he lives in Miami, and he's, it's like, okay, like things are changing. He's got a publicist, whatever. Yeah. But like, they're going after his like dad and shit. Like, oh, your dad works for the World Bank. You must be like Illuminati. I was like, okay. I mean, he went to like a good school, but like it's reaching, man. It's really reaching. And like I like Alex Jones, but damn, give the guy a fucking break. He has enlightened me more as to like the libertarian ideological relationships in Bitcoin. I can't think of anyone else more generous with his ideas.
Yeah, it's scary. I mean, we've had these conversations. I've told you in the past, like, I mean, the hardcore, like Bitcoin maxis, like they scare me. Like they just truly scare me because like, I want to, I am your people, I think, or no, I guess they would not consider me their people, but like I resonate with 99% of the values and like, the long-term view, but timing is everything and looking for different opportunities at different points. For example, the last 4 months is not the greatest time to just be, margined out long Bitcoin. Right. And so there are points where you got to manage risk or look for alternative routes to park capital. But like long term, I want to be exposed to Bitcoin for sure. It's tricky, but you need those maximalists because they are what, in some sense, right? Like they are the hardcore, maybe people that are putting their sweat and time into this space, right?
But that's the part where I just like most of the people who are actually building shit. I don't think they fucking get on Twitter and shit posts like this.
Gotcha.
What I assume is like these are guys who are like fucking out of the Air Force. They got some mid-level job where there's no like aspirational hero narrative. They're now middle age or older. And they need a fucking quest and they need a villain. And honestly, like I'm going to stop using the term Bitcoin max or Bitcoin fundamentalist because I do think of myself as a maximalist. I think most things that are worthwhile should end up on Bitcoin. I think you can do stable coins on Bitcoin. I think you can do DeFi on Bitcoin. We haven't gotten there yet, grant you, right? That's why I play in Tezos. That's why I think what Ethereum is doing is interesting, right? But I do think that the best of the best can end up on Bitcoin, or I don't see a technological reason for it not to. Now, there's smarter people than me, like Hasu, Eric Wall, like there's a lot of guys who have pivoted. Udi pivoted, right? It's not. I'm an idiot compared to those Giga Chad brains or however they present themselves on Twitter. I like Michael Saylor's an interesting one too, right? Because he's sort of like the maxi leader. Although he's careful. He doesn't pander too much. He doesn't rile up the crowd.
Yeah.
He doesn't do ad hominem attacks. It's the ad hominem attacks. And it's the name calling. I'm just like, this isn't thoughtful. You guys contribute nothing. You can't code and you have no narrative here and you're just jerking off and it's embarrassing. Yeah. And no one's going to want to be part of that community.
We started talking about Voyager at the top of this. And one of the things that we left out was this damn FDIC clause, right?
Oh, shit. Yeah.
What does that mean? Because
dude,
anyone that has assets in CeFi right now should be terrified, right? In the sense of, not actually insuring deposits is something that I don't think most people signed up for if they're using some of these big CeFi places. So what do you take of it? Like,
well, I'm a little floored. I kind of want that smoke to clear. But if the initial report is correct, and what was the Metropolitan Commercial Bank said that there's an omnibus account for all of the money that Voyager had, FDIC insurance, to my understanding, would not apply because it's only insured up to $250,000. And so normally when a large institution has a ton of money, they go out and they buy T-bills, right? Or some commercial paper that's relatively liquid so they can meet the redemptions. And so if I never used Voyager's product, I have no idea what their legalese said, but if it is true that they were saying that their deposits were actually FDIC insured and they weren't, that is a huge, huge egg on the face. People should be ashamed. I don't want to say drawn and quartered, but this is where even the libertarian is like, no, that's fraud. That needs to be held accountable. That is a legitimate lie, and that confuses the marketplace, and that really undermines the whole sort of movement here. It also is why not your keys, not your cheese. And I've told all my friends from the get-go, don't be on CeFi. You haven't seen this through enough cycles. I lost money at Cryptsy. Sounds like people might be getting their Gox money starting next month. A whole 8 years later, which if it was Bitcoin, frankly, that might be good, right? You may have sold in the last 2 months. But.
Were they made whole, though? Did they get all their deposits back? Doxed folks?
It's a lot. It's a lot. People are going to be getting a lot of money out of Gox. Okay. A lot of it was recovered, maybe not whole, but I mean, look, you shouldn't have had your money on Gox, but totally forgivable if you did, because that was our first time at the rodeo.
Yeah, that's right.
And Cryptsy was the first time at the rodeo for me. If you literally got your money locked in Celsius, I guess if it's your first time in crypto, okay. They have a huge hole in their balance sheet. I don't know what the fallout's going to be. They are closed for business, right? If there was a safe way to short Celsius tokens, I would be on it, because I don't know how they recover. The second they open their doors, everyone will withdraw their money. Anyone with a brain should withdraw their money.
Yep.
So yeah, that
have to limit it. Like, it's going to be interesting to see what they do, right? Like, they're going to have to do some type of like cash limit or like cap of, if they do, hopefully they do open their doors, right? Because I mean, if they do, that's a good thing for the industry in the sense of we're trying to save face here, I think, or save capital and not wreck everyone, because I think that helps us repair quicker. I don't know, maybe you see it differently, but
they have to declare bankruptcy. Them opening their doors, as far as I'm concerned, is just declaring bankruptcy and letting this go to the courts. I don't think, Celsius is fucked. Anyone who's already started to go under here seems fucked to me. That includes, I assume Blockfi is fucked, frankly. I could be wrong, but like Volt, there's a whole bunch of these CeFi guys. They're just getting taken out back and shot. Their books are totally opaque. They all seem leveraged to the tits. Someone mentioned that this is like a great opportunity for zero knowledge proof, where you could see what the counterparty risks are without revealing that it was your book.
Mm-hmm.
I was like, oh yeah, at a protocol level, that makes sense. I mean, expensive to build, but if you could convince people to use it, that would be a great solution to what happened, at Blockfi because of 3 arrows and Celsius and all this other collateral damage. I don't think the smoke clears for another 6 months.
It's interesting because, I mean, when I see the reports on Celsius where people are tracking their wallet and their like liquidation price, and that continues, their loan collateral ratio there continues to get paid off. So I don't know what that means, if they're just using client funds to like pay off that leverage ratio, or because I think it's down to like $3,000 now is their liquidation price on Bitcoin. And so it's just in the sense of, because I've been using that as a proxy of like almost like what the market might be looking at here, just in terms of some smoke clearing, in the sense of not another immediate margin call and cascade of liquidations. But
but I think SBF walked away from giving them money because like you have a $2 billion hole here,
right?
And I don't know anyone who would give them money. I don't know. I think that business is broken. I think it's fundamentally broken, because trust is the thing that matters here. There's a whole lot of red flags with Celsius, right? Like, not Mashinsky specifically, but like he was working with the guy who's caught up in some fucking pedophile. I don't know. It's all hearsay. I don't want to sling mud because I don't actually know, right? I know nothing. But I had friends who were using Celsius, and they were using KuCoin, and they were using Luna, and they were all my doctor friends who had never been in this space before. And I was like, you guys are idiots, not your keys, not your cheese. And sure enough, they are all much poorer for it. But they had more money than me to begin with, so I'm the idiot.
I mean, Celsius has always sort of rubbed me the wrong way, or at least he has. He just always felt like a salesman, kind of pushing his, like, just hardcore, really kind of going after it. Totally. I did have deposits on Blockfi. I mean, I don't anymore, but Blockfi, yeah, to me, like you say, it was a different animal, right? They didn't promise the same APYs and do the same type of sort of degenerate stuff that Celsius proved to be doing.
Yep.
And I will say, like, look, I am rooting though for Blockfi. Granted, look, it's a black box. You just have to know what you're getting yourself into. I don't have an issue with Blockfi as long as folks understand that you are literally giving money and you have no witness as to where that money goes. And it is being reapothecated. Let's be honest, right? Like,
yeah, Blockfi is exactly.
In Blockfi it is, right? So like those are your risks. But like, look, if you're okay with that, if you want to earn your 8%, I think in a bull market, you could probably do that. But like, you know, when you start to break down and, you know, liquidity tightens up, again, super easy to say in hindsight. But like,
I think that
to be careful.
But it's that, I mean, you and I are in a very, 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 very small group of human beings who know what the word rehypothecation means. Right? There's 340 million Americans. Do you think that there's more than 35,000 Americans who know what rehypothecation is?
This is true. Yeah.
Like it is a very, it's not that it's sophisticated. It's just like people don't think about that because they want to watch the game. They want to go play some golf. You know, they want to go to the movies. They're not thinking about how things are collateralized and the chains of custody. And Bitcoiners know what rehypothecation is. Okay, so it's more than 35,000. There's 350,000 Americans, but it's a very small group, and it's only if you've been around through one winter or two winters, right? And you come from finance. You know, hopefully people become more educated about this stuff. I doubt it. You know, it's kind of hard. You and I have an itch that we like to scratch, and most people rather not know about it, right? They don't want to know how the sausage is made.
Yeah.
So,
yeah. Oh, good point.
Turns out it's all melamine and fucking formaldehyde, and you're gonna die, and your money's gone.
Yeah.
It's another day in the markets.
Yeah, it is. It's a brutal world out there. All right, what else? Anything else on your mind, or anything else that we want to touch on here?
I feel like, you know, we've talked a lot, which is great. You know, it's always good to catch up with the other stuff. What do the next 6 or 18 months look like? Like, what is it? Where can I put my money where my mouth is? I see, you know, SPYs are up, treasuries are down. We're risk on today. Kind of nice volume and follow through. Like the next time I talk to you, what's the thing where like, oh, I was right or I was wrong? You know, there's got to be like a point of just keeping track, being honest with myself. Like, do I want to be like long growth here and short energy? And what's the pairs trade? What's the sector rotation here?
So, I mean, personally, a good deal of my funds are just fully rules based, running in systematic trading strategies. So, like, they're just doing their thing, and right now they're not really interested in the market. Frankly, they're pretty cash heavy and not doing.
I bet.
But my personal, like my PA on the side and some like my retirement accounts, I am extremely aggressively long here growth.
Really?
Over the past, basically, I mean, again, using ARK as a proxy here, I mean, I have essentially been accumulating ARK over the past month or two on most of these dips. I don't know what my cost basis is, to be totally honest, but you know, when I look at this chart here, and today's like the perfect example, I don't think you can fade growth if ARK is above $46. Like, I think it has legs if it's going to break out of this base and continue to make highs here. So right now, my dollars are heavily growth. It's basically I'm basically like 50% NASDAQ, 50% ARK. And honestly, I have some leverage on there. Now, I have stop losses. I will lighten up. I'll write some calls against it. Like, I am going to manage this position. I'm not going to just let it run, but I am leaning into growth here fairly aggressively, like full stop.
I mean, it doesn't seem irresponsible.
Yeah.
Like, I don't think ARK, you know, falls 50% here from a Friday to a Monday. You know what I mean? You know, if that were to happen, it's because a nuclear bomb was detonated over San Francisco. And,
right.
You know, it's like a very different world that we're living in. Yeah, probably most of shaking. I just wonder, like, do we chop here in this 40 to 30 range and then have like a wick down to like a 2 handle? You know,
what market? What are you talking about?
Like ARK. ARK is at what, 46, right? I think it probably didn't get much lower than 36. You've got a 20, 30% cushion here. which is reasonable, right? I mean, look, objectively, it is going sideways.
Yep.
Objectively, ARC is making a base. It looks like a basing pattern. It looks like stage 1 accumulation. That's textbook. I totally buy it. I guess I think it's going to take more time. That's what it is. I think you were still in this range in 6 months with a lower low, but we'll still be in the range.
And the range, what do you call in the range here? You're talking 35?
This range is it's like this, 40, let's 35, 50, a meaningful breakout above 55. Okay. We got a long time. This thing is not going to V recovery. This is not a V. This might be a great time to be buying. I think things have gotten a lot better. But I still think there's chop here. I still think there's chop.
Interesting. So yeah, I do think, I think it's a risk on party. ARC over if ARC's holding over $46, I think it's a risk on party. If Bitcoin's over 21K, I think it's a risk on party. And look, those are tight leashes you can have.
That's a very tight leash. That is right. Okay.
Now, we're being tested right here. It is sort of do or die. Again, I look at ARC on that monthly chart. I mean, that monthly chart is freaking horrendous. It's 78% off of highs. You made a good point, though. The 80% to 90% is a 50% product.
That's the thing, right?
I do not intend to ride that drawdown, right? So let's be fully clear. I will be out of this position. I will be out of this position. I will take my loss and I will take my lumps if this starts to, fail violently here.
Right. So from a trader's perspective,
that's right.
I totally get why you're accumulating here.
Yeah.
Because it looks like there's way more upside. What I suspect continues to happen is I could have said this back in May. I could have said this back in June. And how many times does the stop loss hit in that grind? And you're losing 2%, 5 times over. Now your book is down 10%. You don't go in on the 6th time. And then boom, that's the one.
100%.
Because that's the psychology. And I think we have more grind because we haven't seen what I would call the Main Street panic in their 401ks. Maybe it doesn't happen, right? Yeah. No,
so what about you? So what would you? So I'm technically there. You're saying you're not fully bought in on the growth trade necessarily. Treasuries, gold, picking up gold at these crushing prices over the last 5 days. I mean, gold's seen a pretty damn big move down.
Has DXY flipped yet? I'm going to pull up the chart. Let me just see. Where's the UUP, right?
UUP's, gap up 3 days, to start off the week after the holiday. That
UUP is just a tit ripper. I want to see the dollar turn, right? I want to see the dollar start to pull back before I think risk can really come back on. We are back to the COVID panic levels. Wow. I had no idea. I have not been paying attention.
On the Dixie you're talking about, back up to
just the Dix, exactly. Yeah, I guess trying to think right. So you're willing to accumulate ARC here. What do I think is worth accumulating? I think Merlin is actually accurate on this. I would continue to play energy for a stronger bounce.
Yeah.
Someone asked me what should I do with my money? And I was like, just buy Bitcoin. It's the only one that I have long-term conviction in. I gotta admit.
Hold your own keys. Don't use leverage. I mean, that's not crazy, right?
That really, it's the one that I can explain to myself the best. But even there, you gotta have guts. Because I haven't ruled out 14K wick. I don't think we stay there long, but I haven't ruled it out.
Right. But again, I mean, look, if your time horizon is truly 5 years, what's the difference between, again, I'm not sure.
You know what? If I was 65 years old and I wanted income, I bet municipal bonds here are actually pretty good.
Yeah.
Triple tax-free municipal bonds, maybe get a leveraged one. You can earn a good 7-8%. You got $1 million earning 8%, earning $80,000 a year tax-free. That seems like a good play. Because I don't know how much higher yields can get here. It feels like they've really stabilized, and I think that's what's going to drive equity market. Where does the yen stop? Yeah. When does the yen stop being in a total fucking free fall? That's something I really want to know.
Yeah, it's interesting. It'll be an interesting summertime here. We got Fed coming up in 2 weeks. And so, yeah, dollar's just ripping nonstop. So it'll be interesting.
Well, look, if the past 6 months have been any indication, Bitcoin goes to 28,000, everyone gets super long, and then we go right back to 14,000. How's that? I say increasing volatility. What's that? That's not a collar. What's that option spread where you say volatility increases over time?
Yeah, you're just buying a straddle, or you're just buying
straddles.
You're buying volatility.
Yeah, I would be buying the vol for the next 6 months. I think vol gets worse here, but yeah, that's for October. It's low liquidity now. Melt up in the low liquidity summer.
Mm-hmm. I mean, that's what I'm playing for now, and I'm going to be a quick seller. I mean, I've been accumulating
exactly
under 21K, and that's exactly right. I want to go to.
You're a quick seller, right?
And only letting it out.
Bingo. And I'm not like that, right? I just keep on accumulating stack. I have this more invested. Like, I just want to own the real good thing and just keep putting my money into it. I don't care what the price is. This is a good thing to own. Yep. Very different dimension.
That's pretty much it. Same thing with the ARC trade. I mean, as soon as this, even at $50, like I will already have enough, 15% profit. I will start letting some out and just sell into the rip. Anyway, well, yeah, we'll see. They're going to go pretty hand to hand. They're quite correlated at this point.
Sure. Listen, I can hear things happening in my house.
Sounds good.
It's really good to chat with you, man. We should do it again.
Definitely do it again. Thanks for coming on and shooting shit.
Always good to hear you. And I guess your brother has left. He was like, I don't need to hear your stock picks, you idiots.
He's like, I'm done.